Hello and welcome to the Time Freedom Calculator overview for mobile devices. Now, there is a separate video if you're planning to use the calculator on a computer, laptop, iPad, that sort of thing. And I do actually urge you, if you're going to spend any time with this calculator, if you're talking an hour, 2 hours or more, which you certainly can, that you probably should flip over and use your computer to do it. However, to get started and to do some basic calculations, there is no reason that you shouldn't use the mobile device. Now, let's go ahead and get started. When you enter timefreedomcalculator.com for the first time, you'll be greeted with this message. And it tells you what our goal here with the calculator is. The most important thing is what we're looking for is not full financial freedom, but instead freedom. And what that means is when can you have some degree of financial stability, but also control how you spend your time completely. Yes, you will probably have to keep working, but can you do it in a flexible way? And to get started, it says right here, there are 5 numbers that are required before you can see your first result. So click anywhere on the screen to exit out of this message, and you'll get into the Time Freedom Calculator. Here's how to read it. You'll see across the top, there are certain buttons flashing. That is to show you that you can find help if you click on the question mark with the circle. You can order my book if you click on the book, and you can actually schedule time to hire me to help you complete your calculator, various scenarios, and talk through some other options for how you can reach time freedom sooner. Everything I'm going to show you initially does not require that you log in. However, if you do log in and create an account, you can create multiple scenarios and continue to update this as you live your life, because as we know, these are all projections, and as we learn more things, we can make changes. As you look at the screen, you have across the top your numbers: current age, free age, plan to age. That are 3 of the 5 numbers required to create your first result. Then if you look here, we have 3 icons across the top. We have the little dollar flowing to 3 dots, the piggy bank, and the wallet. You can slide across on your mobile device from left to right to access the different tabs. These are cards. On the laptop, on the computer, you'll see them all on one screen, but for the phone, you have to look at one at a time and scroll. So we saw our 3 boxes above. We have the 4th box here, which is what you live on per year. And then the 5th box does require you to swipe right and enter your total savings. So let's go ahead and get started. We have a scenario, and this is a typical scenario of someone who's, say, 42 years old. They've been working hard for 20 years, let's say, at their job, and they're starting to question, am I going to go all in anymore, or am I going to now start, maybe not optimize around optimal wealth, but optimize my life and work around optimal freedom? And I want to be able to do that in 3 years. So I'm going to shoot for age 45 to become free. When we enter our first numbers, it's going to show us a result as to if we can start working flexibly at age 45 and not run out of money by the time we reach our plan to age, which could also be called your age of death. We're going to call it 100 years because, people are living longer and longer these days. If you click on the labels, you'll be able to see some additional help text. The reason I did that for inflation rate, I default some values, and I urge you to just keep the defaulted values in there unless there's a reason to change them. An example is inflation rate. Now, let's go down and we're going to slide back to lifestyle expenses. In our example, we believe that we will live on $120,000 per year. All right, I click that in there. I'm going to leave the other items there for now as is. I'm going to click over to savings and investments. Because we're 42 and we've been avid savers, we've been able to save already $530,000. Now, the moment I exit out of here, it's going to create our first result. All right, and you see along the bottom, scroll down to make more updates. What this has done is it's quickly flipped into a real-time chart as to our success. Across the top, you'll see untitled. This is the name of the scenario, and if we want to name a scenario, we need to create an account. So for now, let's just leave it untitled. Then we have our success dashboard. Free age, the cash river, which if you read the book, this is the amount of money that you'll be receiving upon your free age, which is not going to be enough to cover our $120,000 per year, as well as the savings mountain at that time and a legacy value. These are all red because we're run out of money. If you look at the chart, you can see from age 40 to 100, we go up and boom, we're down. And now this is because we haven't entered all of our numbers. We need to get a couple numbers in there to get a result. Then we'll go back in and we'll finish up our numbers. But before we do, I want to show you that along the top right, next to total savings, you can flip back and forth between the chart and the table. So this is a table that shows kind of year by year for those that are more analytically minded, like how is that table being generated? The way to read this table is from left to right, row by row. So at age 42, you have a starting balance. You move to the right, you add anything in purple, you subtract anything in gray, and you become with your ending balance. Look at 572K. That is the beginning balance of the next year. And you continue to work your way through the table. Increases to the balance are in purple, like I said. Decreases are in gray. And what are the white numbers? The white numbers are used to calculate the gray number, but you'll just see how that flows through. And also there's additional details here if you click on the labels. Okay, so let's go back to the chart. And what we're going to do is flow down here, and we're going to continue to fill out our inputs. Now, as we fill out the inputs, the chart's going to automatically update here as I scroll back up, but we're not going to pay attention to that just yet. Let's go back to our lifestyle expenses, and I'm going to explain this a little bit more for you. What we have here is the first card that's shown is your average yearly expenses. It grows at the inflation rate, which was 3%, and it will inflate year by year according to the option that we select for inflation. To keep it easy, these are all defaulted until now because we have inflation every year. So if we estimate that we're going to need to live off $120,000 in today's dollars, by the time we need to do that when we're 45, when we're free, that number will increase by the inflation amount. Research shows that once we get into the 70 and older age range, our overall expenses do reduce. And that is why this number is here. And we can change this number, but on average, once we hit 70, we're going to drop our expenses down. And this is despite the fact that health coverage costs go up. All of our other costs go down such that net, we actually have an overall reduction in expenses. And then lastly, the average tax rate. This is not your marginal tax rate, the rate in which you kind of overall, so if it's the average amount of taxes, it's the taxes as a percentage of your overall income. And again, like if you're in the middle zone of those that use my calculator, using some of these numbers that I'm showing in this demo, 20% is quite accurate. I am building out additional help materials and detailed FAQs to help you show what number to pick for yourself. But this is a good number to leave in as defaulted right now. Now, here's where the calculator comes in as handy. This is just our average expenses. What if you have some other one-time expenses? For example, I'm going to add in here a new expense, and I'm going to call it college tuition because we have a kid in 8th grade. And so that means 5 years from now, I'm 42. So starting at age 47, I'm going to expect to spend, we're going to go to a public school and spend $30,000 a year starting at age 47 and going until age 51. And that $30,000 is going to grow by inflation starting now. So if college costs that amount now, I'm assuming that with inflation, it's going to go up by the time it hits 47, and by the time I'm 48, all the way through 51, it's going to continue to increase. You can add additional one-time expenses here beyond just the straight expenses that are in the first card. All right, now let's flip over, and I scrolled to the right, and we're back to savings and investments. Your current amount is your current amount. And if you click on the help button, this is all of your savings, okay? It's all savings, regardless of if it's retirement savings or ordinary taxable savings. This is projections. We're not going to get too fancy in terms of calculating tax rates. We're going to use that overall tax rate, and that's going to be good enough for our projections. There are 2 investment returns listed. Oftentimes, as we get older, in this case at age 70, we're going to, in this example, flip from a more aggressive return of 8% down to a 5%. But it can be the same, it can be different, you can change these numbers. For now, let's leave the default. However, we're 42 in this example, and in 3 years, we're going to become 45 and start to work flexibly. Maybe that's when we're going to go independent as a contractor, or we're going to become an entrepreneur, and we're going to work more flexibly. But up until that point, we're going to work hard as an employee, as we are, and we're going to put some additional money away in savings. All right, so I'm going to call this yearly as employee. Okay. And I know that for the next 3 years, I'm going to be able to save $24,000 per year. I don't think I'm going to be able to increase that too much. but I'm going to do it for 3 years, age 42, 43, and 44. You can continue to add other savings as required in this column. Now we're going to scroll to the right one more time and we're going to get to flexible income. This is where we put flexible work and other passive income that we have. So there is nothing listed right now, but we know that we are going to follow the rules of the time freedom formula, and we're going to perform some flexible work, whatever that might be. And in this example, we're going to do it until age 70. I am thinking that once I start at the age of 45, when I want to achieve time freedom, I'm going to make $120,000. Now that's maybe less than what I currently make, but that's by design, right? And I'm going to do that until I'm 70. I'm going to inflate that now. However, it's not just work that's captured in, but not only flexible work until age 70. In the flexible income column, we can include other passive income, including a pension that we are going to get at age 60 from work that we did previously in our career. So in this example, I'm expecting $30,000 starting at age 60, but that's going to run all the way until we die, our plan to age. And in this example, I'm going to use the fact that this is going to grow, starting with inflation starting now, but if some pensions don't grow by inflation, and in that case, you would hit never. But in my example, we're going to do now. And then finally, I want to show you another example of what you can include in this column. If you have perhaps a one-time inflow of money, after our son graduates college, when we're 52, I'm going to cash out the home equity and we're going to sell our home. And because we live in California, we're going to make $400,000. And we're going to do this. Remember, we were paying college tuition through age 51. Year 52. And this is a hard estimate. We're not going to try to grow this by inflation for the next years. We're just going to say, let's just settle on $400,000 at age 52, 10 years from now. And this now, we have all of the entries for flexible income, savings and investment, and lifestyle expenses. And if we scroll back up to the top, we'll see our new graph. And look at that. Right now, we're showing that our money is growing and growing all the way up until roughly $10 million. If you go all the way back up here, you can see that our legacy value when we die at plan to age of 100 is $10.15 million. We, at age 55, will have a cash river of 90,000. Let's take a look at the table really quickly. And we can see that, yes, here's the additional savings, the 24,000. We're getting investment gains based on the balances that we already have. And our expenses are here. And we have matching income as well, going all the way up. And the result of all that is indeed this wonderful graph. What do we do here? If we want to save this, perhaps run some other scenarios. Maybe we want to exclude the pension, or maybe we don't want to save, or maybe we want to try to become free sooner, set our free age to 44. The best way to do that is to first create an account. And so to do that, you hit log in. You don't have an account, so we're going to sign up here. Okay. I'm going to just type my address as brian.herriot, and we're going to call this demo@gmail.com. And you hit send me a code. And what that's going to do is it's going to send a code to your email so that you don't have to remember a password. Now, the email actually does come pretty quickly, and I already have this here. I'm checking it off on the other side, and we're going to type in our code, 82. This is a randomly generated number, 883. And log in. And you'll see once that happens, now our brian.herriot@demo2 is listed there. And we can change the name of this scenario to, let's call it Flex Work at 70. Now, the best way to change this, if you want to alter it, is to create a copy. It'll be called copy. And then we can call this version 2 Flex Work at 70. And then we can go in down here and we can start changing our numbers around. Like, oh, let's say we wanted to not really become financially free until 50, right? And all those changes immediately change the graph. And you can see if we were just to like work hard more intensely and for another 5 years, we could radically change how much we'd be worth. But again, then we're not maximizing for freedom. We're maximizing for wealth. And that's how you go about doing this. I hope that you enjoy. Again, if you're going to spend a lot of time on this, I probably recommend moving over to the laptop or another computer. But for, quick numbers, this is certainly usable. Just the key is to remember once you get down here to these cards that you have to scroll right and left to find the different categories of the time freedom formula. All right. Thanks so much.